revenue from contracts with customers. I mean, this thing revenue, I consider it very important because you have 5 financial statements, and the first financial statement is your P&L, and within the P&L, the first line is the revenue. So it means that everything starts with the revenue, okay? So the standard actually, it was implemented in 2015. Previously, we had 2 standards. It was called IS 18, which was revenue. The name of the standard was revenue itself. And then you had IS 11. IS 11, it was called as revenue from construction contracts. So these contracts were rather long period contracts. When I say construction contract, mostly long period. So IS 18 and IS 11, these 2 standards were abandoned, they were cancelled, and one new standard was born, and the name was IFRS 15. So whenever ISB brings a new standard, I mean, the old standards were cancelled out and the new standard came in, definitely there were some problems, and those problems were to be solved. And IFRS 15 actually solved some of the problems which IS 11 and IS 18 could not handle. So one of those problems, which, I mean, before I start IFRS 15, I just need to give you an overview that what was the objective of giving this new standard and what problem it solved. So there is one thing which we call accrued income, and the problem was with the accrued income thing. Accrued income, there was a lot of, manipulations were done in financial reporting on revenue based on estimates. First of all, I would like to ask you if any one of you knows what is accrued income. Can somebody tell me what is accrued income? A little bit of feedback from you people.
It is basically the services has performed and the invoices has not been issued. It's basically unbilled.
Okay.
Portion of revenue. Yeah.
Okay, perfectly fine. Exactly. So actually receivable, we all are familiar with the word receivable and accrued income. They both are quite similar. The only difference is that in case of receivable, the invoice has been sent and invoice has been accepted by the client. But in case of accrued income, we have performed the work, but we have not yet billed it. We have not yet invoiced it to the client. So it is like, from, let's suppose, from 1st of June till 30th of June, you perform some services, you will invoice the client, you will make some calculations, and probably in the first week, say 7th of July, you might be issuing the invoice for the work performed here. I mean, there are many businesses, sometimes you give invoices on each transaction, and sometimes you accumulate the work together, and then you give one invoice at the end of the month. It happens in case of a lot of services when you provide. Imagine a courier company, imagine a transportation company. So you have a transportation company and you have clients, and your clients, they request you deliveries or dispatches, they request you vehicles, every day. So every day when you send one vehicle to one point to another point on client's request, maybe it costs you $70 to bill, but you don't send a $70 invoice here. Otherwise, you will be having like 300 invoices in a month. So what you do, you keep the record, and then on 30th, you compile all the record, you send it to your client. The client gives approval here in 3 days that this record is correct. All of these deliveries we requested. And then once the client gives you acceptance, then you issue the invoice. So invoice is issued here on 7th of July, but on 30th of June, you are closing your month. And you have to book your expenses, and you have to book your revenue for June on 30th of this date. 30th of this month. But until this day, invoice has not been issued. So this amount is called accrued income. So what do you do? In the first place, like on 30th of June, you make a double entry, you say debit accrued income. and you say credit, you are booking the revenue, credit revenue with X amount. And then on 7th of July, when you actually sent the invoice, after that you say debit receivable, the amount is transferred to receivable, and you say credit accrued income. So accrued income, you just remove from the books. Accrued income, it goes away. It was first debited, now it is credited, and the amount goes to receivable. Now, this accrued income thing is our internal thing, okay? In receivable is when I send the invoice to the client and the client accepts it, that yes, this much value of the work has been done, and they receive the invoice, they accept the invoice. Invoice has payment terms, 30 days, whatever. When they receive the invoice, it means that also they accept the payment terms. And that is, two parties have communicated, two parties have reconciled, two parties are confirming this amount. But in case of accrued income, client is not involved, because on 30th of June, I estimated that my accrued income is, I don't know, 1 million. It's 1 million. Client does not know. If I book it in my books, if I record it in my books, it goes as my revenue, because you remember the double entry, debit accrued income and credit revenue. So you book your revenue. But this revenue is not being verified because it is your internal estimate. So what happened in past, that you are making a building, and that building probably you are going to finish in 3 years' time, and the cost is some $50 million. Until the end of the year, 31st of December, maybe you have completed only 30% of the work. And 30% of the work, maybe you need to record only 15 million in revenue, let's suppose. Based on 30%, you should be recording 50 million of revenue. But unfortunately, companies, entities, businesses, they found out this loophole, and they somehow managed to accrue more. They managed to accrue more revenue. It should have been 15 million, but they somehow are recording, I don't know, 20 million, based on some vague estimates, based on some estimates which were not really very accurate, because IAS 18 did not give you a proper method of allocating the revenues. So there were quite a lot of confusion, and it was very easy to manipulate these numbers. You could have done it 22 at the end of the year, and next year when you reconcile, you will make adjustment. More revenue is shown in 1 year and less revenue. Ultimately, you will record 50. But what you did, that you just played around with the accounts, and you showed more revenue here and less revenue there, because you want somehow to put your business in profitability. So you are showing more of the revenue now. So it was like, the division of the total revenue between 3 years based on old IS 11 construction contracts, or maybe IS 18 revenue. That was not really very much accurate. And IFRS 15, when it came in IFRS 15, one objective was to give you a more systematic way, a more systematic method of allocating this revenue, dividing this revenue, and properly recognizing the revenue, so that we can, get rid of this manipulation. I can just give you one example. I forgot the name of the company because I read this case maybe 7-8 years ago. So it was a very big, large telecom company in US. It was not American Online, it was not AOL, but it was one of the competitors of AOL, which was working more in the rural areas, because AOL was more popular in the urban side, in the cities, but in suburbs and smaller areas, that small company was more popular. I forgot the name, but I clearly remember that they were actually, now they don't follow IFRS, and they never at that time, because I'm talking about year 2003 or something like that. So there was no concept of IFRS, but accrued income was also in GAAP, and accrued income they were manipulating, and they were showing it, and it was a telecom company which had to bill to its clients. Okay, like one telecom company had subscribers for mobile phone and for internet, like, you know, millions of subscribers, and they estimate their billing, how much they are going to bill them in the next month. And they were making something like, I don't know, if I'm not mistaken, it was 400 million or more in wrong calculation under accruals. And that 400 million, of course, if you increase your revenue by 400 million, it is definitely going to impact the profitability and the financials. Because that company which I'm telling you, it was later on, it went bankrupt, it was liquidated, and this was one thing which was also found out. So anyways, coming back to the topic, IFRS 15, very important standard. It has replaced two old standard, IS 18 and 11, and the focus was on proper allocation of revenue. Any question you have, you can ask.